Hey everyone, welcome back to Corporate Decoder, the place where we unpack the mind-bending world of corporate filings. And today we've got a real juicy one from Phunware Incorporated. Get ready because this proxy statement is a peek behind the curtain of what really goes into running a publicly traded company. And let's just say there is a lot more than just sunshine and rainbows. And hey, if you love getting these insider looks at financial documents, do us a favor and hit subscribe. Plus, we've got a growing community over on Discord where we break down even more, so the link is in the description below. Alright, let's dive into what we have here. This is a filing called a Def 14A, which is basically a proxy statement. Think of it as the company's official invitation to its shareholders to vote on important matters at their annual meeting. It is where they lay out who is running the show, what decisions need to be made, and how they're managing the company's money. This particular filing is from Phunware Incorporated, a company we've talked about before. They're in the business of developing software for mobile experiences, and like many tech companies, they've had their ups and downs. This document is giving us a look at their upcoming 2025 annual meeting of stockholders, scheduled for the 17th of December 2025. So, what are the big items on the agenda for shareholders? First up, they're looking to elect 2 new directors to their board. This is crucial because directors are the ones who oversee the company and make big strategic decisions. Then, they're asking shareholders to approve the selection of a new accounting firm, CB's CPAs PC. This is a standard procedure to ensure the company's financial statements are independently audited. Next, we get to the part everyone loves to talk about: executive compensation. They're holding what is called a say on pay vote. This is where shareholders get a non-binding say on whether they approve of how much the top executives are being paid. It's not just about the salary, but the whole compensation package, including bonuses and stock awards. And if that wasn't enough, they're also asking shareholders to vote on how often they want to have this say on pay vote in the future, with options for every 1, 2, or 3 years. Now, a big chunk of this document is dedicated to explaining the voting process because, let's be honest, corporate governance talk can get a little dry. It covers everything from how to register for the virtual meeting to how to cast your vote by proxy if you can't make it. They even remind you that if your shares are held by a broker, you need special instructions to vote. For those of you counting your shares, it seems that as of the 23rd of October 2025, there were just over 20 million shares of common stock outstanding. So, on each matter, you get 1 vote for every share you own. And what if you don't vote? Well, if you are a shareholder of record, meaning your shares are registered in your name, and you don't vote, your shares simply won't count. If your shares are held by a broker, your broker might have the power to vote on some things if you don't give instructions, but not on other key proposals like director elections. Moving on to the people running the show, we see a list of executive officers and directors. Jeremy Kroll is currently the interim chief executive officer and is also nominated for a director position. Brendan Botkin is the VP of accounting and financial reporting, and Chris Olive is the chief legal officer for directors. Elliot Hahn is serving as chairperson of the board of directors. Quine Du is a Class III director. The nominee for Class I director, Ed Liu, brings over 25 years of financial, strategic, and operational leadership experience. With a strong background as a chief financial officer for venture capital and private equity-backed companies, his expertise in finance, accounting, risk management, and corporate development, particularly in digital media and gaming, makes him a valuable candidate. They've also separated the roles of CEO and board chairperson, with Jeremy Kroll as interim CEO and Elliot Hahn as the chairperson. They believe this structure allows each person to focus on different leadership aspects, which can be a good thing for effective oversight. Like most companies, Phunware has committees to handle specific areas. There is an audit committee responsible for overseeing financial reporting and audits, a compensation committee which, as the name suggests, handles executive pay, and a nominating and corporate governance committee tasked with finding and recommending new directors and ensuring good governance practices. Now, let's dig into the financials a bit. We see a report from the audit committee. They reviewed the financial statements for the year ending the 31st of December 2024. Interestingly, they mentioned material weaknesses in the company's internal controls over financial reporting. These included issues with its general controls and a lack of segregation of duties. This is something to keep an eye on, as strong internal controls are vital for accurate financial reporting. A notable event here is the resignation of their former accounting firm, Markham LLP. This happened because CB's CPAs PC acquired Markham's Attest business. The audit committee then approved the appointment of CB's CPAs as the new independent auditor for 2025. Looking at the fees paid to their former auditor Markham for the year ending the 31st of December 2024, Phunware paid about $562,000. That breaks down to around $384,000 for audit fees and another $178,000 for audit. Related services for 2023, the total was about $360,000. Alright, let's talk about executive compensation for the year ended the 31st of December 2024. The named executive officers, or NEOs, include Stephen Chen, the interim chief executive officer, and Michael Snavely, the former chief executive officer. Chris Olive, the Chief Legal Officer, and Jeremy Kidd, the Senior Vice President of Sales, are also on the list. Looking at the summary compensation table for 2024, Stephen Chen's total compensation was around $54,000, mostly in other compensation. Michael Snavely, the former CEO, took home about $557,000 in 2024, which included a severance payment of over $262,000. In 2023, Mr. Snavely's compensation was significantly higher at over $339,000. Chris Olive's total compensation for 2024 was around $315,000, and for 2023 it was about $414,000. Jeremy Kidd's total for 2024 was about $405,000. When we look at outstanding equity awards, Chris Olive had restricted stock units that had not yet vested. As of the 31st of December 2024, he had about 3,240 units that had not vested with a market value of roughly $16,800, and another 4,173 units with a value of about $21,700. This section, pay versus performance, is really important. It tries to link how much executives are paid to how well the company is doing. For 2024, the compensation actually paid to the Principal Executive Officer, or PEO, was about $612,000. The average for non-PEO NEOs was around $360,000. This is juxtaposed against the company's net loss of over $10 million in 2024. In 2023, the PEO compensation was about $691,000, and the average for non-PEO NEOs was around $475,000, while the company had a net loss of over $52 million. And back in 2022, the PEO compensation was over $619,000, and the average for PEO NEOs was a whopping $1 million. This was also the year the company showed a net loss of almost $51 million. The table also shows a steady increase in the value of a $100 investment over time, but that is against a backdrop of significant net losses. It shows that while executives were paid substantial amounts, the company itself posted large financial deficits in these years. Now for the question on everyone's mind who actually owns the company, the table for security ownership as of the 28th of October 2025 shows that our executive officers and directors collectively own less than 1% of the company's stock. Specifically, the group owns about 48,000 shares out of over 20 million outstanding. Brent Bocken owns close to 10,000 shares, and Chris Olive owns just over 11,000 shares. Elliot Hahn holds about 25,000 shares. This indicates that the vast majority of ownership lies with external shareholders and not with the insiders. There is also a note about Section 16A reports, which are filings required for insiders to report their stock holdings and changes. It seems Phunware had a few late filings in 2024 from Michael Snavely and Elliot Hahn, and a few others related to stock transactions and grants. While they believe everyone ultimately complied, these delays can sometimes raise questions about transparency. Now we get to transactions with related people. This is where we look for any deals between the company and its executives, directors, or their families. The policy here is that these need to be approved by the audit committee unless they fall under certain exceptions. One key transaction mentioned is the separation agreement with Michael Snavely, the former CEO. In October 2024, he left the company and received about $262,500, which covered 9 months of earnings plus continued health insurance. A really interesting part is the legal trouble brewing with a former director, Rahul Mewawalla. Back in July 2025, he signed an agreement for a significant role with substantial monthly pay and nomination for the board. However, the board later formed a special committee that concluded Mewawalla made intentional material misrepresentations to get this deal. The company then rescinded the agreement. Now, Mewawalla has filed for arbitration, alleging breach of contract, defamation, and wrongful termination, seeking significant damages. The company, of course, denies these claims and plans to fight back vigorously. This sounds like a messy situation that could drag on. Back to the annual meeting and the election of directors. We've got 2 nominees for Class I Director: Jeremy Kroll, the current interim CEO, and Ed Liu, who brings considerable financial and governance experience. Their election will be decided by a plurality of votes cast. As for the accounting firm, the audit committee picked CBA's CPAs PC to audit their books for fiscal year 2025. They are asking shareholders to ratify this choice. It is important to note that their previous auditor, Markham LLP, resigned due to an acquisition. The audit report from Markham in 2024 and 2023 did not have any major issues, but the company did acknowledge material weaknesses in internal controls. This is the say, on pay vote, shareholders are asked to approve the compensation of the named executive officers. The compensation committee and the board say they value shareholder input and will consider the outcome of this vote for future compensation decisions. And regarding how often shareholders should vote on executive compensation, the board recommends every 3 years. They believe this allows for a more long-term perspective on compensation policies. Finally, we have the Other Matters section. This is where they usually put standard disclosures about forward-looking statements and legal disclaimers. They emphasize that while they're optimistic about the future, there are various risks and uncertainties that could impact their actual results. They do a good job of reminding you not to place too much reliance on these forward-looking statements. So, what is my take on Phunware Incorporated based on this filing? They've got a clear plan for board leadership and are seeking shareholder approval on key governance items like auditor selection and executive pay. The legal dispute with Rahul Mawawala is a significant red flag, and the company's history of material weaknesses in internal controls warrants close monitoring. The financial tables, particularly the pay versus performance section, paint a picture of substantial executive compensation against a backdrop of consistent net losses in recent years. This is often where shareholders start to ask tough questions. While a $100 investment has grown over time, the significant losses suggest the underlying business performance hasn't fully caught up to executive pay. The direction of the company will heavily depend on their ability to navigate these legal challenges, strengthen internal controls, and, most importantly, turn those substantial losses into profits to justify the compensation packages. That is our deep dive into Phunware Incorporated's latest proxy statement. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And remember to subscribe for more unraveling of corporate secrets. And don't forget to check out our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.